Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross. Hope Santa was generous and the new year is prosperous and happy.
Yeah, let's just hope, all of us hope for a quick end to this lockdown, a return to some normalcy, and an opportunity to embrace all of those we've been unable to embrace throughout 2020, Jim.
If you summed up 2020, what one phrase would you say best summed it all up?
I would say, looking back at I guess really focusing on the last 8 months, Jim, what we would say is that the stay-at-home order put in place across the country was pretty much adhered to by Canadian homeowners across the country from April right on through till today. They'll probably remain in these stay-at-home orders throughout the spring of 2021, and that pretty much summarizes what we saw. This is indicative by the lack of active inventory that has been posted as available to be purchased from April right on through today. Odds are, Jim, as we exit this year, so odds are on January the 1st, 2021, we will see the lowest number of homes, existing homes, for sale across Canada that we've seen since the mid-1990s. So we're going to enter the new year with homeowners desperately afraid of selling their own home because of the consequences of COVID. Now, I understand this is totally opposite to what your listeners have read in mainstream media, what they've heard from economists, academics, and your local real estate brokerages. But listing counts, active listing counts, are always an indicator of the security that existing homeowners feel about the housing market. Home buyers, on the other hand, are looking at the inventory, and they're hearing these false narratives that have been a consequence of this stay-at-home order. They've heard how supply is been low, which is an absolutely fraudulent statement. Any exclusive buyer broker, which there are only a couple of across Canada, who adhere to the full compliance of the rules that define what an exclusive buyer brokerage is in 2020, could have shown you 3 to 4 times the number of homes that your non-exclusive buyer broker could have shown you. An exclusive buyer brokerage is a brokerage, a real estate brokerage that never, not now or in the past, has listed homes for sale. What that means is 99.9% of all the brokerages across Canada are legacy brokerages. They're brokerages that carry with them the legacy of the seller beneficial system. So when you go out to look at a home and you hear that there's only 130 homes for sale across Canada, you should know that there's actually about 3 times that number of homes that you can select from. But you're never going to hear about them from your real estate broker. Instead, you're going to hear supply and demand pressures designed to create fear in you and get you to make a decision that you shouldn't be making. Why would you go out and look at one home that your real estate broker tells you is available when you probably can buy 4 or 5 other houses on the street? We certainly know that over the course of the year, there's going to be another 4 or 5 houses on that street listed for sale. It's the laziness of the real estate industry that has led us to where we are today. Surmising 2020, Jim, it's very simple. Canadian homeowners were under a stay-at-home order, and they have stayed at home throughout the year.
What will CMHC and Mr. Siddall, their opinionated CEO, face as a year-end national price?
Well, what CMHC and Mr. Siddall are going to be faced with is around a $565,000 average price, which Mr. Siddall and CMHC have told Canadians to believe. He told them to believe this number his entire tenure as CEO of CMHC. We had removed from the CMHC charts the word existing home price. So my firm had that removed from the CMHC charts. You can go look at the CMHC charts now and you'll see they have replaced it with the word MLS price, average MLS price. It no longer says existing price. The problem Mr. Siddall and CMHC got into was believing organized real estate was publishing an average price. As I've said on the show for years, the average price announced by any real estate board anywhere in Canada or any MLS system anywhere in Canada has nothing to do with the average price of a home. It's what the average buyer is buying that month. If the average buyer is buying a $1 million home, the average price will be $1 million. If the average buyer was buying a $300,000 condo, the average price would be $300,000. It isn't talking about the average price. So right now, the forecast that Siddall and CMHC gave about the pandemic and how housing prices were going to fall by up to 18%, they're being laughed at right now. And rightly so. They're being laughed at because for years they have portrayed the Canadian Real Estate Association's average price as produced by their chief economist, Greg Klump, from 1995 until he retired in 2020, as being the average house price, which it was not. Any experienced real estate broker who was involved in the trading of thousands of homes, who was involved in the building of their own MLS system, who has been in the real estate industry for over 30 years, would clearly understand that it's called purchase price, not average price. See, Mr. Siddall and CMHC are going to be faced with an average price of around $565,000 at the end of this year. $565,000. During this pandemic alone, house prices, under using Mr. Siddall and CMHC's own ridiculous term, have increased $50,000. What they're going to be faced with is that during the spring of 2021, a period when house prices were already depressed, you're going to be comparing those depressed prices against depressed prices heading into the new year. So the real housing market, with the underlying principles of the housing market, are not even going to be seen next spring. People have to understand we're looking at around $196,000 was the average purchase price in the spring of 2020. That's nationally. That price was skewed because of where the sales mix was at that time. That means we can drop $50,000 almost right now, between now and the spring of 2021, and it would be no difference in year-over-year gains in the quarter. You're not going to see that. It's not going to be the fall of 2020, and probably not till January the 15th, 2022, a year after about another, probably somewhere around 450,000 Canadian families will purchase a home using a realtor. There'll be another 200,000 who will close on a home that they purchased from a builder. It'll be another year before the damage done to their equity is revealed by housing statistics. Mr. Siddall will be long gone. Mr. Siddall will be retired. His short-term extension that he's under right now, because they couldn't find someone else to take his job, will have come to an end. So what he's going to face on January the 15th, 2021, when year-end 2020 statistics are released by the Canadian Real Estate Association's new head economist called Sean Cathcart, he will be reporting around a $565,000 average price, when you can go out and buy 80% of the homes in Canada for less than that price.
We'll have more with Ross Kay right after this.
value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, Klump, Morneau, Polos, Wilkins, and soon Siddall will have left their posts they held from 2013 through till today. How would you define their legacy and displayed knowledge about the housing markets and home prices?
We would define their legacy, Jim, as one of arrogance and one of ignorance. Either they were arrogant enough to believe that their degrees that they earned in university decades ago, or the studies that they've reviewed in their 30-plus years of professional economic life were accurate. They didn't challenge the comments from the Canadian Real Estate Association. They didn't once publicly go out there and say the Canadian Real Estate Association is misrepresenting average purchase price as average house price. What they allowed to happen, Jim, between June of 2013 and December of 2020, with a little lull in 2016 in BC and a little lull in message in 2017 in Ontario. Lull of messages I'm talking about. They have allowed the Canadian public to be defrauded, in my opinion, Jim, of hundreds of billions of dollars. They have allowed Canadian families to incur unnecessarily hundreds of billions of dollars in mortgage debt, which will be carried with them for the next 25 years. There was no reason in June of 2013, when Polas first took the reins of the Bank of Canada, or when he had Wilkins assigned as his deputy governor, or when Morneau took the reins as the Minister of Finance, or when Siddall took the reins of CMHC, that they didn't summon Greg Klump into their office and demand that he proves house prices change in 90 days. This is something he could not prove, Jim. I want to let your listeners understand this or hear this as we are exiting this year and as I'm commenting on the housing market. You've heard all these crazy comments about how roaring the housing market has been this year, how in spite of COVID, housing prices have gone up, how limited supply has outpaced huge demands. And this is the singular cause for why housing prices have risen. This is what I want your listeners to picture. We live in I'm talking about the province of Ontario, the province where everyone is clamoring to say house prices are gaining by the minute, where there is simply not enough supply to keep up with demand. Here's what the scenario is. In 2020, if you look down your street and you could see 100 houses, every 3 months, you would find a for sale sign on one of those 100 homes. 2 of the months, you would find no for sale sign. 1 month, then one month out of the 3, you would find a for sale sign. Over the course of the year, over the course of 4 3-month periods, 4 quarters, you would see 4 homes come on the market. 4 homes come on the market. 50% of those homes would not sell. 50% of the listings posted to the MLS do not sell. They may be listed again with another company, They may be listed again with the same company. They may have a revised price. But the original listing did not sell. Once every quarter, one house out of all 100 sold. Now what they want you to believe is, if one house sells this month, nothing for the next 2 months, then the next 2 months, a total of 4 months, we had nothing for sale, and then in the 6th month, another house is listed. And the house that's listed could in no way resemble the house that sold at the very first house that sold at the start of the 6-month period. They're going to be able to calculate the price change that took place, not only between those two homes, but across all 100 homes that you can see as you look down the street. It's the most absurd and ludicrous comment I have ever heard. If I go through 100 homes, look down the street, and I go through every single one of those homes, no two homes are comparable, no two homes are even slightly comparable. Is it on the north or the south side of the street? Is the backyard treed or untreed? Is the roof new or old? Meaning, has the roof been replaced in 3 years, or has it been replaced 7 years ago? Or has it been replaced 12 years ago? Has it been replaced 15 years ago and it has 20-year shingles, which are already now decayed from the sun? Was the interior of the home the same? Were they the same square footage? Did they have the same decorating package? Did they have the same improvements? Did the home that sold have a $40,000 kitchen, or did it have the original kitchen? Were the carpets blue, or were they beige? Was the exterior of the house red brick, or was it white stucco? Because I have 100 homes to select from. And even in tract homes, meaning a newer subdivision, where all the homes look fairly similar, where they were all built, all 100 homes were built in the same year. There is a wide variety of difference once a home gets to be 8 years old plus. And with each passing year, that difference in quality greatly increases. They want us to believe, they want you to believe as a home buyer, to spend on average across Canada $560,000 of your money, that a random house sells once every 3 months out of 100 homes, and from that, they're going to claim house prices increased. Because they're never going to complain, or they're never going to pretend house prices decreased. They're going to ask you to believe that narrative. It has been a narrative that has been delivered for over 100 years. Most Canadians don't understand that in 1913 is when the Canadian Real Estate Association, the first version of it, CAREB, was founded. The first 80 years of the existence of organized real estate in Canada was a seller-only representation market. It was illegal to represent buyers in any form whatsoever for the first 80 years of organized real estate. Here we are now, 20 years after buyers were legally entitled to receive representation from a real estate brokerage, and they're still asking you to believe that a random home out of 100 every 3 months is able to determine the value of all 100 homes. They don't talk about if the first home sold was a 1,400 square foot small one-story, a small two-story, and the home that was sold 6 months later was a 2,400 square foot house at the end of the street, within view of the 100 homes you're looking at. This is what they want you to believe, and it's what you have been forced to believe. Klump, Morneau, Polaz, Wilkins, Siddell actively worked in tandem, whether through their own ignorance or through their own arrogance, to support a false narrative that house prices change. I can assure you folks, you would be hard-pressed to find a single street in Canada where over a 6-month period, 2 comparable quality homes sold anytime in the last 40 years. I can tell you, you could find over that 6-month period 2 or 3 out of 100, 2 generally speaking, in what is called a busy housing market, but the quality of those homes will be in no way comparable, rendering them uncomparable in an appraisal process. The legacy that these folks lead is one of incompetence, ignorance, and arrogance. I don't know where their blame lies, Jim, but what I do know is that you need to challenge yourself at all times when you're representing families. These people were not entitled to the arrogance, ignorance, incompetence that they have displayed for the last 7 years. They were not allowed that, should never have been allowed that privilege. You were required to tell the truth. They simply didn't do it.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, why did so many forecasts of collapsing prices never arise?
They didn't come out, Jim, because we're talking about average purchase price. And when you cut off first-time buyers from a housing market, the average purchase price rises. It only makes common sense. When those people buying the most affordable houses in your community stop buying, the average price is going to increase. This meant when these forecasts were provided by CMHC, it explained just how out of touch with reality CMHC is. Because clearly they didn't understand first-time buyers would not be commanding the same share of sales that they were commanding in March and April. The reason why you had low prices in March and April, if you go back and you look at the homes that actually were being purchased at that time, lower-priced homes were being purchased, and higher-priced homes were not being purchased in the same amount. This drove the average price down. We are now into the end of the trade-up process of the sales chain taking place, which means your house price gains are going to be taking place at their highest rate. Now, what I'm saying that what I really mean is that the price acceleration, like that is a consequence of the sales mix. It peaked back in September of this year. So even after everything you've heard, that aggregate sales mix got so out of whack in September, so shifted highly towards trade-up sales, that the house price illusion that was ongoing reached its historical high. It had never been that high. It was that high in August, basically almost the same. It was that high again in September, and then from that time it started to reduce, which is how it works. The reason these forecasts were wrong, Jim, is because they don't understand we're not talking about house prices. We're talking about the average purchase price. What is the wealth of the average buyer active in the marketplace? I'll give you this example. If someone was to say to me, Ross, how do you know foreign buyers, specifically Chinese buyers, were buying in the Vancouver real estate market at certain periods? I would say, if I'm a Chinese buyer looking to buy Vancouver real estate, I'm going to be purchasing that real estate in the fall and early spring. So generally speaking, between November and February. I will then be closing on that sale. That's when I'll be closing on that sale. Okay? I would like to be purchasing that home earlier than that so that I'm closing on it in that November to February window. Why? Because the way that the money flows out of China, I don't know why this happens, so this is beyond my pay grade, Jim. But I know that your exchange of Chinese dollars for Canadian dollars is going to be the best in that November to February window, historically speaking, over the last few years. I also know that the exchange rate, you're going to get way less Canadian dollars for your money in the July window. Most years, there's a 10% swing. In other words, I get 10% more of my money in the spring. So why, if I'm going to make a 10% gain, would I not time the market in that manner? Are we assuming these people are stupid? Are we assuming millionaires become millionaires because they're stupid? I don't believe so. CMHC's forecasts for collapsing prices are not going to be recorded till the third and fourth quarter of 2021. The reason for that is that's when for the first time since 2016, the fall of 2016, where we're going to see, now again, barring some huge change to the economic mix next year, or a second wave of a new version of the virus wiping our nation out for another year, that will be the very first period where you're going to have a late trading period being reported against an early trading period. And that is when the divergence in the average purchase price will be the greatest. As we said earlier in the show, that won't be the first quarter. That's why their forecasts are wrong, because they don't understand how housing prices are purchase prices, which are impacted by the trading cycle and the sales chain. These things never change. They never will.
What is the legacy the real estate brokerage industry will be held accountable for when 2020 sales end?
I think what's going to happen as we come out of this period, Jim, 2021, 2022, and 2023 are going to be transformational for the real estate brokerage industry. The real estate brokerage industry, as you knew it in 2020, probably will not exist by 2023 the way it is today. There is too much data that's being acquired right now, too much knowledge, the impact of AI, where the legacy brokerage model is going to not be exposed for the fraud that it is. The lunacy to tell Canadian home buyers that during a lockdown, a pandemic, a recession, huge numbers of the Canadian population going unemployed, mortgage delinquencies taking place, tenancy delinquencies taking place, money being accepted that has to be repaid because it was taken on semi-fraudulent or misunderstanding terms. All of these things while this was ongoing, housing prices, it was ludicrous, Jim. People are going to look back at this time and they're going to say, what on earth did we believe? How could we listen to organized real estate tell us that housing prices were increasing? How could we then look out at the MLS or Realtor.ca or on our neighborhood street and see house prices and believe that change is real? I really want your listeners to understand what I'm trying to say here. The province of Ontario has about 5.6 million homes, okay? What the Ontario Real Estate Association and every real estate board in Ontario wanted every single Canadian Ontarian to believe is that during this period of April till the end of this year, during a recession, a lockdown, a delinquency of mortgages, a delinquency in mortgage debt, deferred mortgage debt, the plethora of economic problems that we're under right now, huge unemployment, businesses closing up, the average price, this is their words, not mine, of an Ontario home increased $80,000. That means from the smallest, cheapest homes in the province to the largest, most expensive homes in the province, they want you to believe that the average price went up $80,000. Now let me bring this closer to home. That would represent a 13% increase in price. That would increase the wealth of Ontario homeowners by $330 billion. They want you to believe, real estate brokerage industry, OREA, every single real estate broker in Ontario, wants you to believe that your wealth has gone up $330 billion. In British Columbia, they want you to believe it's gone up $82 billion. $82 billion. Across the country, they want you to believe it's gone up $572 billion. They want you to believe house prices have gone up almost double the amount of debt the government has taken on. They want you to believe this at a time when less than one in 100 houses is trading hands every 3 months. They want you to believe this. And for the 400,000 Canadians who went out and bought a house from a realtor from April till now, they clearly believed them. Those families believed realtors in 1990. Most people in Ontario don't know, Jim, certainly not in the GTA, that you actually had 11 months of the housing market correcting before house prices went negative in Ontario. Okay? You had, if you read the housing market that we read it today, you had a staggering 11 months advance notice that your house price was going to go negative. In 2007, before the Great Recession hit, you had 11 months notice that housing prices were going to go negative. 11 months notice. And this is at a national level, folks. Okay? At the provincial and local level, your notice is even longer. People don't understand that in January of 2018, when house prices started to go negative in Canada, you had 11 months notice. This time around, it's been longer because the notice that you were given was stalled from April till November. And you are now into question mark, number of months since your notice was given. That is the legacy of the real estate brokerage industry. They've wasted, this is the third concrete time period where they have ignored the reality of the housing market for their own personal gain. This time around, we're looking at around $150 billion in new mortgage origination debt, which will be reported for the end of December, year over year.
CMHC has a $300 million contest underway called the Housing Supply Challenge. What do you expect to see as a result of taxpayers and homebuyers who buy CMHC insurance and fund this challenge with its outcome?
What I expect to see is this, Jim. If they were to acquire all the data that we have access to, if they were to acquire all the publicly available data that we have access to, they could do that for $1 million. Not from us, from where we get it. They could set up their computers, their staff, everything for $1 million. They could save the Canadian taxpayers $299 million. $299 million could be saved.
And since when have they ever saved us money?
Right. People say, how can you afford to do all these crazy things, CMHC? Well, when you charge first-time homebuyers crazy insurance rates of 4% on the mortgage amount that you take out, something where the delinquency is next to nil, you get all these millions and billions of dollars that you get to blow any way you want. You can come up with every fancy thing that you want to believe. CMHC is going to get this data. I think the first challenge is $60 billion, Jim, or 50 or 60 billion, something like that. They're going to spend that. They're going to give it to people who come up with these solutions. Okay, this data is already available, folks. We have access to it every day. I have granular data accessible and updated every single day that CMHC is going out to go after. A lot of the data is the government's own data itself. But if you don't understand where to get it from a government office, then you're going to go out there and try to find it somewhere else. You're going to be out there looking for the golden goose. How do we find the answer? What's the magic? What's the magic spell? What's the magic? Well, it's very simple. You need to first understand how housing markets work. And when you understand how housing markets work, you can explain every single penny of house price appreciation from 2004 forward. Let me say that again. Without spending a penny, you can figure out, using publicly available data, why housing prices increased every single penny from 2004 forward if you have the knowledge required to read the data. If you don't have the knowledge to read the data, it's useless. You're throwing money, good money after bad money, which becomes more bad money. You're wasting taxpayers' money. You are going to continue to allow organized real estate to serve a false narrative to the Canadian public. Look, folks, I am not negative on the real estate brokerage industry. I think the real estate brokerage industry, when practiced to its highest level of professionalism and competence, can provide a valuable service to Canadians. The same service or better than that of the financial advisor community. The problem is organized real estate is not structured to support that type of realtor even existing. It didn't, when we were selling homes, everything that we tried to do to raise the professionalism of the industry was fought against by organized real estate itself. So what we did is turned our backs on organized real estate, and we ran our own business the way that we thought it should be run. That meant in the 1990s, when we had this advance notice that the housing market was going to slow down, we stopped working with buyers. We started working with sellers. This is the exact same thing that needs to happen today. $300 million being spent by CMHC, or even the $50 million for the data portion of the housing supply chain challenge, is wasted without the knowledge required to read the data. You have to understand that 1 + 1 = 2. You can't believe that 1 + 1 = 3, which is exactly what CMHC believes. They believe in their hearts. They are educated in they believe it to their core that 1 + 1 = 3. We're sitting here with the math that shows us 1 + 1 = 2.
Investor condos have taken a beating. Will the investments become popular again?
Condo investments are going to be sold by shills and hucksters for generation after generation. From the days of Tommy Wu back in the 1980s until today, shills and hucksters have been supporting condos as an investment. Condos are not an investment. The reason why they're not an investment is because you can't control the costs. If a roof needs to be done in your condo building, you can't say, I want to replace that roof right now. I know what the cost is. I know what the return is. I'm going to replace. You can't say that in your condo. You have to select your condominium building so carefully. And the building that you want to select most often doesn't allow rentals. The building that you most want to own an investment condo in won't allow you to own one and rent it out. Investor condos should never be taken upon by those not unprepared to own large number of units in the building. Instead, you need to be looking at townhomes, semi-detached, and detached homes. I understand those are more expensive. There's a reason why they're more expensive. There's a reason why your costs are more controllable. There's a reason why the price profile going forward for them is so forecastable. But anyone who tells you to invest in a condo higher than, let's say, I don't know, 4-story condo. I mean, the stacked townhomes, they sort of work. But even then, what your normal condo investor tells you is, oh, you got to look at cash flow. We stopped looking at cash flow when interest rates drop below 6%. What investor in his right mind looks at cash flow as a reason to invest in a condo? If I can make $1,200 a month and I spend $100 a month in negative cash flow, I'm saying this, folks, without my condo going up a penny in price. In other words, my tenant is paying me $100 less than what my carrying charges is. But at the end of the year, I'm going to be $14,000 ahead. I believe that's a good investment. I don't want to be focused on making $200, $300, $400 a month. And then at the end of the year, having $4,800. I'd much rather have the $14,000, regardless of any gain or loss that I make from the acquisition price that I paid for the unit. Investment condos, you have condo fees, which are out of your control. You have realtor fees, which are always higher in a condo than they are in a detached, because the condo is harder to sell. Take all these things into consideration. And if you hear anyone, I just watched Jim on YouTube yesterday, some financial advisor in Vancouver, a young guy who's out there trying to explain condo or real estate investing to, I guess, his clients. It's on YouTube. And I look at it and I said, this guy is clueless. I don't know if he's really a financial advisor or he just wants to be a financial advisor. He's sitting there encouraging someone to move into, to take a condo and make interest-only payments on the home equity line of credit. I hope your listeners understand how insane that is. If you want to have taxable income from your condo, go ahead and do it. I would much rather have a condo that's fully paid off 20 years, 25 years from now, and then be looking at how I can minimize my capital gains in my retirement years.
What was the single best advice you gave to someone about buying or selling a home in 2020?
The best advice that I gave anyone this year was to my parents early in 2020, which was to sell. They were hesitant to sell. I also had another family member whose situation dictated that they should sell. The reason why they should have both sold was because they're selling a higher quality real estate investment to move to a lower quality neighborhood, but a higher quality home. They were exchanging a lifestyle for home equity. What that meant was, Jim, they were able to cash out at peak price and acquire other real estate, or in the other case, rental, that is going to cost them way less over the next 10 to 15 years. That was the best advice that I gave, because it was actually to family members who you are always reluctant to give advice to. When I give advice to my folks, you have to understand, my folks sold thousands and thousands of homes. Not hundreds, not dozens, thousands. My parents made thousands of people millionaires. There are thousands of families in the city of Burlington, Ontario, who are millionaires because of my parents. Here they are in 2020 getting advice from me to sell the family home, a home that they built with their bare hands. Literally, folks, while my dad was ranking as the number one real estate salesperson in Canada for RE/MAX, he took his summers to build this house. He sold it in August of this year. Peak price. He timed the market perfectly. Now, I can't say that you can always hit bang on peak price. I mean, this is a beautiful thing to see in action right now. They acquired another home. It's being custom built by a builder right now in a lower price part of the province, a part of the province where they came from. Ironically, they sent me a picture today, Jim, of their original home that they purchased for $16,000 in Thamesville, Ontario. It's a little story-and-a-half wartime house. Actually, ironically, Jim, it's a house CMHC should have been very familiar with from the day, that had been told no longer looked like that little story-and-a-half house that they had purchased all those years ago. They are now moving a few towns over from that, having a custom-built bungalow that to be able to spend the rest of their years in. That is probably the best advice that I gave, because they won on the sale. They were down quality in terms of location, i.e. moving off the Great Lakes into a southwestern Ontario town. They were up quality the house. The house they're having built, they will not have to spend a penny on over the next 15 years. And right now, that will probably be as long as they're going to be around to enjoy that house. So that's probably, Jim, the best advice that I gave anyone this year. And it just happened to be the same advice that we're giving to people across Canada every single day.
Ross, I hope Santa was generous and that you have a prosperous and healthy New Year.
Hey, same here, Jim, and I hope that all the listeners' families get through this period comfortably and stay positive about the new year, because, you know, the thing that I've learned from studying housing markets, studying home ownership, studying the thousands of families that we've studied over the last 40 years is that adversity builds opportunity when it comes to home ownership. The adversity that we have gone through this year and that's going to be happening in the next 2 to 3 years is going to be offset by a singular opportunity that we haven't seen probably since the early 1990s. You're going to have a 10 to 15 year window of wealth building that only your parents or the boomers had access to. It's been a long time coming, but this opportunity is just around the corner.
Ross, thank you so much for being on the show.
Thanks, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseSpace, @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.